Ever get stuck staring at a contract and just like completely baffled
Oh, yeah.
about whether the person you're about to hire is an employee or an independent contractor?
Yeah.
I mean, it's a question that I think keeps a lot of business owners up at night, and for good reason.
Mm.
You know, misclassifying workers can have some pretty serious consequences.
Yeah, absolutely.
But luckily, you are in the right place.
That's right.
Today, we are diving deep into the often murky waters
Murky is a good word for it.
of employee versus contractor status, guided by the latest IRS guidance on Section 530.
Yeah, that's right.
To help us navigate this complex topic, we have an expert in tax law with us today. Welcome to the show.
Glad to be here.
So glad to have you. You're right. Worker classification is a critical area
Absolutely.
for businesses and individuals alike.
Yes.
And the IRS's recent updates have added kind of a new layer of complexity to it.
Yes. Definitely a lot to unpack there.
Yeah, definitely. So before we dive in, I just want to remind everyone that we're here to kind of break down these complex rules and make them understandable.
Absolutely.
And if you have any like burning questions about this topic, we encourage you to submit them for future episodes.
Yeah, we'd love to hear from you.
So let's set the stage. We're going to be focusing on Section 530 of the Revenue Act of 1978,
Okay.
which has been a bit of a safety net for taxpayers facing worker classification disputes with the IRS.
Right.
It's been around for a while.
It has, yes. Section 530 can be a real lifesaver for those who maybe unintentionally misclassified workers. It was originally meant to be a temporary measure,
Really?
but it's become a permanent fixture in the tax code.
Interesting. Okay, so let's unpack what Section 530 actually does.
Okay.
So imagine you're a business owner and you've been treating a group of workers as independent contractors.
Right.
But now the IRS is questioning whether they should have been classified as employees. Like, what happens?
Yeah, that's a tough spot to be in, for sure. That's where Section 530 comes in.
Okay.
It can really help in that situation. Essentially, if you as the taxpayer can demonstrate that you've consistently treated the worker as a non-employee and that you had a reasonable basis for doing so, you might be relieved of certain employment tax liabilities.
Okay.
So it doesn't erase the misclassification,
Gotcha.
but it can significantly reduce the financial sting.
Okay, so it's not a get-out-of-jail-free card, but it can help.
Exactly.
That sounds like a huge relief for business owners.
It can be.
But I imagine there are some specific requirements you need to meet to qualify for this relief.
Oh, you're absolutely right. Section 530 isn't a get-out-of-jail-free card. There are 3 key requirements that the IRS looks at:
Okay.
reporting consistency, substantive consistency, and reasonable basis.
Okay, let's break down each of those.
Yeah.
First up, reporting consistency.
Okay.
What exactly does that mean?
So reporting consistency basically means you've been filing all the necessary federal tax returns, treating the worker as a non-employee. You're consistent with your reporting. Think of those 1099 forms you send to independent contractors. That's a key part of demonstrating reporting consistency.
Okay, so it's not just about how you treat the worker in practice, but also how you've documented that relationship to the IRS.
Yeah, precisely. The IRS wants to see alignment between what you do and what you report.
Gotcha.
So next we have substantive consistency.
Okay.
And this kind of delves into how you've treated all workers in similar roles.
Okay.
Let's say you have a team of graphic designers working for you. If you've classified some as employees and others as contractors, even though they do essentially the same work,
Yeah.
that raises a red flag for the IRS.
So the IRS is looking for consistency across the board,
Exactly. It's about treating everyone in substantially similar positions the same way.
not just for one worker in isolation.
Right, yeah.
Now, this raises an important question. What does substantially similar actually mean in practice?
Right. Good question.
That's where things can get a bit tricky. Right?
Yeah, for sure. It can require a careful analysis of job duties and responsibilities.
Okay, and this is where having an expert like yourself can be invaluable.
It definitely helps to have someone who understands the nuances of these definitions and can help you apply them to your specific situation.
Yeah, absolutely. And speaking of experts, this program is brought to you by iFindTaxPro,
Huh?
where tax and legal compliance are made clear and management of client communication simple. iFindTaxPro.com is a platform for professionals and their clients, open to everyone.
Sounds good.
Now let's move on to the third requirement, reasonable basis. What are some ways that businesses can demonstrate this?
So think of it like building a solid case for your classification decision.
Okay.
You can rely on things like relevant judicial precedent, a past IRS audit where a similar classification wasn't challenged, or established industry practices.
Okay.
Essentially, you need to show that your decision wasn't arbitrary, but based on a reasonable interpretation of the rules.
So you're looking for evidence to support your decision, like case law that backs up your classification or proof that others in your industry commonly classify similar workers as contractors.
Right. For example, if you run a software development company and it's standard practice in the industry to hire freelance coders for specific projects,
Yeah,
that would be a strong argument in your favor.
that makes sense. And it highlights the importance of staying informed about industry standards and best practices.
For sure.
Now, I know we have a few questions from our listeners today,
Oh, great.
and we're excited to get to those. But before we do, were there any other key points about these three requirements that we should highlight?
I think it's worth emphasizing that documentation is absolutely crucial.
Yeah.
You need to be able to provide evidence that supports your classification decision and shows that you followed a thoughtful and reasonable process. This means having clear contracts, job descriptions, and records of how you've treated workers in the past.
So it's not enough to simply think you're doing things right. You need to be able to prove it.
Yeah, exactly.
All right, let's turn our attention to some of the questions that our listeners have submitted. We received a few great ones from Eugene M., who has been grappling with some of the finer points of Section 530. So Eugene, if you're listening, we are going to tackle your questions right after.
All right, so Eugene M.
Okay.
His first question is a common concern. He says, what if I followed all the rules for classifying a worker as a contractor back when I made the decision?
Yeah.
But now looking back, I think I might have gotten it wrong. Am I out of luck?
That's a great question, Eugene. It's not unusual to second-guess past decisions, especially when the rules can be so complex.
Yeah, absolutely.
So what's the good news here?
Well, the good news is that Section 530 relief might still be available,
Okay.
even if you later realize you might have misclassified a worker. The key is being able to demonstrate that you met those three requirements: reporting consistency, substantive consistency, and reasonable basis at the time you made the classification decision.
Okay, so it's all about what you knew and what you did at that specific point in time.
Exactly. The IRS understands that these determinations aren't always clear-cut. They're looking for evidence that you acted in good faith and followed a reasonable process.
That makes sense. Now, Eugene's second question is about the new guidance from the IRS.
Okay.
He asks, what are some of the key changes and why should I care? So let's unpack that. What stands out to you as the most significant updates?
Well, one of the biggest changes is the clarification around the definition of employee. The IRS has expanded this definition to include not just common law employees, but also statutory employees, corporate officers, and individuals covered under certain Social Security agreements.
Wow, so it's a much broader scope than many people might realize.
Absolutely. This means that more workers could potentially fall under the umbrella of employee for Section 530 purposes.
Okay, so what does this mean for businesses in practice?
Well, it means that businesses need to be even more diligent in their classification process. They can't just rely on traditional understandings of what constitutes an employee. They need to carefully consider this expanded definition and make sure they're classifying workers correctly from the outset.
It sounds like the IRS is raising the bar here.
In a way, yes, but they're also aiming to provide more clarity and transparency. Another significant change is that the IRS is now required to provide written notice of Section 530 availability before or at the start of an employment tax audit.
That's a huge shift from the previous approach, where taxpayers often didn't find out about Section 530 until well into the audit process.
Yeah, exactly. This gives taxpayers a chance to explore this relief option right from the beginning, which can make a big difference in how they approach the audit.
So it's a more taxpayer-friendly process overall.
I would agree. And the IRS has also committed to considering Section 530 relief before diving into the full worker classification analysis during an audit.
So they're essentially front-loading the Section 530 assessment, which makes the process more efficient and less stressful for taxpayers.
That's the goal, at least. By addressing Section 530 early on, the IRS can potentially resolve cases more quickly and avoid unnecessary scrutiny of worker classification if the taxpayer clearly meets those requirements.
This all sounds as positive progress. It seems like the IRS is making a genuine effort to be more transparent and fair in how they handle worker classification cases?
I think that's a fair assessment. These changes reflect a growing recognition of the complexities involved in worker classification and a desire to provide taxpayers with clear guidance and a fairer process.
Now, Eugene had one more question that gets to the heart of some of the trickier aspects of worker classification. He asked, I've heard that Section 530 only applies to worker classification and not to how you characterize payments. What does that mean exactly? That's a great point, Eugene,
Right.
because it highlights the distinction between two separate but related concepts.
You're absolutely right. Worker classification is all about determining whether someone is legally considered an employee or an independent contractor. Payment characterization, on the other hand, focuses on how you categorize the payments you make to that worker for tax purposes.
Okay, so it's like two different lenses through which you view the worker relationship.
Yeah, a good analogy.
Can you give us a real-world example to illustrate this difference?
Sure. Let's say you have a talented salesperson working for you who's classified as an independent contractor. They receive commissions based on their sales. Now, whether those commissions are treated as wages for tax purposes falls under the realm of payment characterization. Section 530 doesn't directly address that aspect. It only focuses on whether that salesperson should have been classified as an employee or a contractor in the first place.
Okay, so even if you qualify for Section 530 relief because you had a reasonable basis for treating the salesperson as a contractor, you still need to ensure you're handling those commission payments correctly from a tax perspective.
That's a critical point. These are two separate areas of tax law, and both require careful attention.
So it's a good reminder that even if you're in the clear on worker classification, you still need to be diligent about how you're handling payments and reporting those to the IRS.
Absolutely. Compliance is a multifaceted challenge.
Now, before we move on to any other questions, I wanted to share a quick anecdote that illustrates just how confusing these rules can be.
Okay.
A friend of mine who runs a small catering business was recently audited. She had always treated her delivery drivers as independent contractors, mainly because they use their own vehicles and set their own hours. She had contracts in place and everything seemed above board.
Right.
But during the audit, the IRS challenged her classification, arguing that she had too much control over how the drivers performed their work.
That's a classic example of how the details of the working relationship can make all the difference. Control is a major factor the IRS considers when determining worker classification.
Exactly. And in my friend's case, she ended up having to pay back taxes and penalties.
Yeah.
Even though she genuinely believed she was following the rules, it was a costly lesson for her. And it highlights the importance of seeking professional guidance when in doubt.
Yeah, I completely agree. A qualified tax professional can help you navigate these complexities and avoid costly mistakes.
Absolutely. And speaking of experts, this program is brought to you by iFindTaxPro, where tax and legal compliance are made clear and management of client communication simple. iFindTaxPro.com is a platform for professionals and their clients, open to everyone.
Right.
Now, I know we've covered a lot of ground already, but I want to make sure we leave our listeners with some practical takeaways. What are some key steps businesses and individuals can take to ensure they're on the right side of the law when it comes to worker classification?
Well, the most important advice I can give is to be proactive. Don't wait for an audit to start thinking about worker classification. If you have any doubts, consult with a tax professional who specializes in this area. They can help you analyze your specific situation and make sure you're meeting all the necessary requirements.
That's great advice. It's always better to be safe than sorry. What else can businesses do to protect themselves?
Thorough documentation is essential. Make sure you have clear contracts that outline the terms of the working relationship. Document the worker's responsibilities, the level of control you have over their work, how they're paid, and any other relevant details.
So it's not just about having the right paperwork. It's also about making sure it's comprehensive and accurately reflects the reality of the working relationship.
Yeah, exactly. And keep in mind that the rules around worker classification are constantly evolving. Make it a habit to stay informed about any changes in tax laws or IRS guidance.
That's where resources like this podcast can be incredibly helpful. We're here to break down those complex topics and keep you up to date on the latest developments.
You said it. Knowledge is power when it comes to tax compliance.
Now, before we wrap up, I want to circle back to Eugene's questions and offer a few additional thoughts that might be helpful for him and other listeners facing similar challenges. Eugene, it sounds like you're really trying to understand the nuances of Section 530.
Yeah.
And how it applies to your situation.
Right.
And I think your questions highlight some of the most common points of confusion
Absolutely.
for business owners.
Yeah.
One thing that stands out to me is the importance of timing.
Yes, absolutely. The IRS is looking at your actions and your knowledge at the time you made that classification decision. So even if you're now questioning that decision, if you can demonstrate that you had a reasonable basis for it back then, you might still be in good shape.
So it's not about having perfect foresight, but rather about showing that you made a good faith effort to comply with the rules based on the information you had available at the time.
Exactly. And this is where documentation becomes so crucial. Having clear records of your decision-making process, your contracts, your communication with the worker can make all the difference in an audit.
Like building a paper trail that demonstrates your diligence and good intentions.
Yeah, that's a great way to put it. It's about creating a clear narrative that supports your classification decision.
Now, Eugene, you also asked about the distinction between worker classification and payment characterization.
Right?
And this can be a bit of a head scratcher, so I want to make sure we provide some clarity here.
Yeah, definitely.
What are your thoughts?
The key takeaway is that Section 530 only deals with worker classification. It doesn't address how you handle payments to those workers for tax purposes. Those are separate issues governed by different rules.
So even if you're in the clear on worker classification, you still need to be meticulous about how you're handling payments and reporting those to the IRS.
Absolutely. For example, let's say you have a graphic designer who you've classified as an independent contractor and you pay them per project. Even if the IRS agrees that your classification was reasonable, you still need to ensure you're treating those project payments correctly for tax purposes. Are they considered self-employment income? Do you need to issue a 1099 form? These are all separate questions that fall under payment characterization.
So it's like a double check system.
Yeah.
You need to get both parts right, classification and payment characterization, to avoid potential tax liabilities.
Yeah, that's a great way to think about it. It's not enough to just focus on one aspect. You need a holistic approach to worker classification and tax compliance.
And this is where seeking professional advice can be invaluable. A qualified tax advisor can help you navigate both aspects of this complex area.
Absolutely. They can help you understand the nuances of the rules, analyze your specific situation, and develop strategies to minimize your tax risks.
Now, before we wrap up this deep dive, I want to circle back to something we mentioned earlier.
Okay.
The evolving nature of work. With the rise of the gig economy, remote work, and new business models, the lines between employee and contractor are becoming increasingly blurred.
Yeah, that's a great point. The traditional ways of defining employment are being challenged, and this is creating new complexities for both businesses and the IRS.
We're seeing new types of working relationships emerge, and the legal framework is struggling to keep up.
It's going to be interesting to see how this all plays out in the coming years. I think we can expect to see more legal challenges, more regulatory updates, and more debate about how to properly classify workers in the modern economy.
Yeah, it's a dynamic area,
It is.
and it's one that business owners need to stay on top of.
Absolutely. Staying informed, seeking professional advice, and adapting to the changing landscape will be essential for navigating this evolving terrain.
This program is brought to you by iFindTaxPro, where tax and legal compliance are made clear and management of client communication simple. iFindTaxPro.com is a platform for professionals and their clients, open to everyone. Well, that brings us to the end of our deep dive into Section 530 and the complexities of worker classification. We've covered a lot of ground today, from the basic requirements to the latest IRS guidance and the nuances of payment characterization.
It's been a great discussion. I hope our listeners have gained a clearer understanding of this critical area and feel empowered to make informed decisions about worker classification.
Yeah, I agree. And if you're still feeling a bit lost or overwhelmed, remember that you're not alone. This is a complex area, and there are resources available to help you navigate it. We encourage you to submit your own questions for future episodes and to connect with a qualified tax professional for personalized advice.
That's great advice. Don't hesitate to seek out the support you need.
Now, as we wrap up, I want to leave our listeners with one final thought. The world of work is changing rapidly, and the rules around worker classification are evolving along with it. Staying informed and adaptable will be key to success in this new era of work.
I couldn't agree more. The future of work is full of possibilities, but it also presents new challenges. Embracing a proactive and informed approach to worker classification will be crucial for both businesses and individuals.
And remember, the information we've shared today is for educational purposes only and should not be considered legal or tax advice. If you have specific questions or concerns, please consult with a qualified professional. Thanks for joining us on this deep dive, and we'll see you next time.